came from, the dreams we had, the love we shared. This is what we're waiting for. And in my mind, in my head, this is where we all came from. The dreams we had, the love we shared. This is what we're waiting for. In my mind, in my head, this is where we all come. In my mind, in my head, this is where we all come. In my mind, in my head, this is where we all came from. The dreams we had, the love we shared. This is what we're waiting for.
What is going on YouTube? It's Brendan from Market Makers. The drum roll for the main event. Powell and the Fed are meeting in Washington, D.C. today. Tomorrow, they announced the rate hike. It's baked in 25 bips. The main event will be the Powell presser. Bulls will look for something to grab onto to extend the rally. Bears will look for something to say, see, the market doesn't deserve to be where it is. But what we're going to do today in this video is focus on the potential trade setups. That's what I want to really focus on. Thursday's video, guys, I'll update you post Powell presser, what it looks like, the economic outlook, the recessionary outlook, and the timelines that I think are involved in that. And we'll do that for the USA and the EU as well. But today is going to be all about support and resistance of the key assets that we could look to potentially trade. Remember, there's two phases to what happens tomorrow. There's the way the market reacts between now and the actual press conference, and then there's the way that the market reacts post press conference. You could have a pump and dump, you could have a dump then pump, or you could just lift off or crash, right? Now, what I expect to happen, and again, I have no insight into this, I'm just sharing with you. It's a big mixture of opinions out there. A dovish hike. Remember, a dovish Powell doing the rate hike, but really focusing on all the progress and not hammering home the future hikes that may be needed. The market will view that very bullishly. Or if he limits the amount of hikes, if he says anything to that effect, well, we foresee maybe one more hike later this year, but that's data dependent. Or if he comes out and says something more like, we may be raising later this year and we may need multiple raises. Again, if he introduces new bearish language, hawkish language, the market is going to react to that. So either way, it's binary. You're going to get a market reaction is the key. So the key here is to see what could potentially happen. Again, these are near-term setups in the sense of, this is going to be an event driven by Powell and the Fed. Let's go ahead and look at this. DX or the VIX. VIX is still hanging out, guys. VIX is hanging out down near its bull market lows here, where it needs to be to have a strong market, a strong move up potential, just under 14. So you've been building this base here, but if you get volatility, that's when you get the spikes up, okay? I don't anticipate, now my personal opinion, I'd cut myself off. I don't anticipate Powell being super hawkish. I think he should be. I don't think he has the backbone for it or the political wherewithal to do it, because remember, the Fed is basically, regardless of who's president, whether it's Trump or Biden, the Fed basically is at the whims of who they serve, right? So especially Powell, because he doesn't even want to talk about monetary policy, how it's inflationary. He just wants to be really hands off and just focus on whether or not he's raising rates. So I think you're going to get kind of a hybrid. So I think there'll be little nuggets potentially for both sides, which would be really interesting to see how the market reacts to it. So you could call that, I guess, a dovish hike would be that scenario. Now, if Powell brings the hammer, guys, you just don't know. If he brings the hammer, I mean, you could see some fireworks to the downside too. The DXY, this is what you want to watch for a reaction tomorrow, because you're getting that rate hike. How many future rate hikes will be forecasted? Just one more, potentially several more. Again, it's all going to come down to the verbiage of what Powell says. Got rejected here at the 3-2 at 101 spot 5. Again, if we're looking at a reciprocal move, 104 spot 699. Remember, stronger dollar is bad for cryptos, is bad for equities. This is good for the American people to have a stronger dollar, but the markets don't believe the Fed. They don't think they're going to keep raising. They think they're basically done. Of course, the market's been saying the same narrative over and over. We'll talk more about that on Thursday. Key thing here, though, is to see if the dollar reacts to the upside or if it starts cratering. That's going to be a leading real-time indicator for you. Euro dollar, guys. Euro dollar weakness. This week is loaded. Thursday is the ECB, and then Friday's the Bank of Japan. So we're gonna talk about all that next video. But Thursday with the ECB and Friday Bank of Japan, the Bank of Japan is huge. It's big. It's probably the biggest event of the week if they change their yield curve control. But again, we will talk about that more because that's going to really change a lot of the markets. But let's look at this. So again, this is the trade setup that I showed you guys. I took myself. I got stopped out by this rogue candle. I knew this drop was happening. A greater than 2.25% move on the euro dollar. So, unfortunate. I missed out on my own trade, got stopped out. But we'll see where this goes and if it rebounds based on what Powell says, based on what the ECB does as well. So right now, I want to see if this holds between that one spot 1065 or one spot 099. That's where I want to see if this holds in this area between 2618 and the 1. And then we should get that rebound type action. And depending on what happens, you could have this really break out one way or the other. So I don't see anything here yet. If you zoomed into the hourly time frame or smaller time frames, and Powell says something very dovish, you could see the dollar crater more. And so then you could see if the euro starts regaining some strength, then you could potentially get a breakout to the upside. So daily time frame here again, just looking at my channel on the euro dollar, you can see the euro dollar coming down to one spot 1012. So that looks like it's going to try to hold a base here and maybe bounce back up, and we'll see how that plays out. Looking at the S&P, guys, the S&P is at 4575 as I'm recording this. And something I want to show you here, again, this is about near-term trading. So we're going to look at support and resistance levels, but this is really key to understand as far as how far can a market run, okay? And we've talked about this in previous videos. Look at the volume totals down here at each of these windows. So I focus this since this is the pivot pattern, but it's since the October low down here. You recovered with almost 9 million, 9 million, 2 million going through each section here of roughly 61 days, 43 bars, okay? And then you go from 2 million to 132, and where we are now at 620K. You have 14 bars left to fill out this box. If this plays out this way, you're going to come in under 1 million, okay? And volume. So in other words, what am I saying? What I'm saying is volume has gone down left to right, the whole leg up, volume divergence as price continues to move. Well, what does that mean, Brendan? Well, you see this when you build tops. Doesn't mean price can't go up higher, but it means there's fewer participants paying higher prices for assets, driving the price up. But you can see it in the volume down left to right, building volume divergence. The immediate targets that I'm looking at for the S&P. Let's play this out in the sense of Powell is perceived to be dovish, right? We're at 45.79. That was where we hit the 45.80. We're at 45.72 right now. And if we pump up, guys, my next level up is 46.47. Okay, 46.47. So less than 100 points higher, you can see the price move up. And you could get this in a couple of days, especially if Powell, again, comes off what's perceived to be dovish. So we'll see, but I would zoom into a smaller time frame, which we'll do here in a second. Another way to view this here on the daily chart. Sorry, my nose is itching. I either have allergies or I was visiting the White House. It's one of the two options. But looking at this S&P on the daily, again, I'm just looking at this from my trend channel perspective as well. We're right at like peak resistance trend line wise, strong uptrend. Looking at the same levels here, guys. If we come up to that 46, 47, could be a nice breakout to look at on a smaller time frame. So when I start looking at smaller time frames, I carry over my fibs from the larger time frames. 45.79, you can see this is where we hit here already, and that would be my target 46.47. So this would be a nice potential breakout trade. If we can flip 45.79 and stay above it, this would be a nice potential breakout trade, a nice 1.5% that could be gained potentially, potentially that day or the within 2 days, this trading week, if conditions remain to be bullish. But I want to see this breakout above 45.79 and beware the whipsaw. Now, support areas, let's go ahead and do that because we didn't do the support areas. If this, for whatever reason, started to break down, first area of support I'm going to look at is going to be higher up here. Let's go ahead and get some lower levels. 486, 382, 618. I'll zoom in here for you guys on the S&P. Key level to watch here would be where you're trading in between 45.26. This is larger time frame, so this should be a strong support area. You've back tested it already. 45.26, so $50 lower than you're at. And obviously, if things started falling apart, your first retracement, by the way, this is how these pumps are going to retrace at some point. It's going to be a good retracement too because they've just been pumping. But if we look at the 21, where is it here? Look at the 21. Your 21, the exact price here of the 21 is at 44.67. So $100 lower is your 21 moving average. Okay, I'm using volume weighted, but it's $100 lower. So bad news, or what's perceived to be bad news, could result in a retracement of 100 handles on the S&P. So downside, great potential trading opportunity, almost equal, really, not quite 100 bars to the upside, but potential upside opportunity. And again, for me to see this on the smaller time frame, I'd want to see a sweep 45.26, which you can see right here on my 1 hour time frame. This is your key areas. Flip 45.79 or fall below. Maybe you get a back test if you're lucky. 45.26. In between here, to me, it's a crapshoot and you're guessing. I want to see one of these two areas flipped and see which way the market goes. Let's go ahead and look at the DJI, the US 30. Okay, we don't usually go over this, but there's a couple reasons I want to show this to you. You're trading in a very clearly defined ascending wedge here. And not only that, you're within, I think, 7% of your all-time highs. This is worth looking at here. So I'm going to show you a couple of things. Look at the MFI. The MFI is at peak trend exhaustion, but notice the angle on the daily time frame. It is pointing straight up in the air. So 90% would be what people call your overbought area. Right now, you're at 90.23. This is the highest it has been since the run up to the all-time high. So you're either prepping potentially for a larger move to the upside, or you're getting near peak resistance. You look at your momentum here, you definitely have momentum to the upside on the daily, but because we are so close to just being massively overbought, we're hitting a lot of trend resistance here on my magical trend lines. I'm looking at my next immediate target here of the 2618 at 35,934. 35,934 here on the daily. If this was to move up, which is only what, 400 points up from here, but I think you're going to get a retracement at some point. So greater than 1% move, you're going to retrace at some point because of how this thing's been pumping. I think it's been up. I don't have it in front of me now. I forget, but I think I don't want to say the wrong day, but I think it's been up. It broke its streak going back to the pandemic recovery, but I think it's been up 8 or 9 or 10 sessions in a row now. So again, unusual. Look where your 21 is down here at 34,446. 1,000 points lower. So in this situation, again, being that you're so close to being overbought, being that you've had this long duration run up here of the Dow. Actually, I guess we could just count the bars, right? That would be easier instead of trying to remember. Do a date range. It doesn't count the first bar, so that's fine. 11 bar. You've been up 11 days here on the Dow. For closes, though, I think it is 10 or 11 days or close to or 10 days because today's still open. So you're going to retrace at some point. So for me, the upside here is only a few hundred points until you probably build some type of top and get some type of retracement, even to the top of this wedge here at 35,434, which is basically where you're at now. But the downside, if this did break down, I mean, you can move down 1,000 points in the Dow. That is a nice drop if that were to happen. And I'm not saying it will, guys. I'm just looking at this basically a 3% move. So again, you could zoom in a smaller time frame and look at the Dow, but I think you're pretty close to peaking out, topping out for some sort of retracement. Looking at the Nasdaq has not been doing as well here. You're getting a recovery, classic double top type action. Obviously, if this thing takes off tomorrow, then you have an end pattern, okay? So you have an end pattern here in the marketplace. If it does take off, they did the reweighting for the Nasdaq, and so they reduced the overall. I think the top 7 stocks were 50% of the Nasdaq 100. I don't know what they are now. I think it's 40%, something around there. Somebody can tell me in the comments. I don't remember the number. Had a very busy day today so far. But looking at the 1618, 15645, first level of resistance you want to watch, 159 where you got rejected, and then the upside if this wants to run up, come up, find support, come back out. If the markets run up, watch 16230, okay? Downside, the first area you really want to watch is the 2618 here at 15293. You're at 15.6. So potentially 400 to 600 point drop to the downside or potential run up. And of course, if you fail at any of these resistances, you're printing that double top, right? So we can look at that with a smaller fib retracement here on the daily as well. Something like this. Let's get rid of that. You can see this a little bit better. You're right at the 382. You're at 15,592. You want to watch the 46 at 15,560, 618 at 15,7, and you got to throw the 786 on there as well. Where are you? 786, 15.8. So those are your immediate upside resistances. And, if I had to guess, I mean, the markets want to rally, but I think they're going to rally to a top. I think we're overdue for a retracement. We have that big pivot, not to jump around on you, but August 14th. And look how quickly that's coming up. That's within what, 14 days? So you have this August 14th pivot. I guess not within 14 days. Let me check. How far out are we here? We are, 14 bars, 20 days. So 14 bars, 20 days. We're within 20 days of hitting this key pivot. Again, you could be running up, chopping around till we get to this pivot. And then I want to see how the market reacts. That's mid-August, more economic data, another CPI print. It's going to be very, very interesting, guys. And let's go ahead and look at let's look at the MFI and everything here. So you have bearish divergence on your money flow. You have your high all the way over here on your money flow. Then you have a lower high in money flow, higher high in price, bearish divergence, and now you have this rebound. You want to break this trend line and come up. Momentum divergence as well. Again, the Nasdaq looking a little weaker, but Microsoft and Google are reporting after the bell today, and if they put up what's perceived to be good numbers, remember, estimates have been lowered by an average of 9% for this quarter's reporting, so it doesn't take a lot to beat a revision down of 9%. But if they are perceived to put up good numbers, you could see a nice pop in all of the Nasdaq as well as the big tech AI mania stocks. Let's look at Bitcoin. Bitcoin's starting to sell off a little bit. Again, I showed you this last video. Competing patterns are geometric symmetry in the marketplace, calling for Bitcoin to potentially push to 39,791 if the equities in confluence with all the indicators, weaker dollar, equities rallying, dovish Powell. That's my upside target. Lower upside target, 34,770. We threw a Fibonacci pattern here, though, and you've been retracing some, currently trading at 29,190. So let's look at this on the daily. On the daily, when I'm looking at this, again, you have to flip some key resistance areas. Basically, the 31.5, you need to flip to the upside, but I don't worry about this retracement here yet. Okay, let me show you this. So if we just pull a fib retracement, now low to the high, you're bouncing right off the 382, 29,124, and I actually would do this as an impulse here. And you can see this candle nailed it perfectly, 28,875. 382 retracement, totally normal. Okay, still shows a potential strong trend in the trending direction that it was in, which was previously up. 46 normal, 618 deeper, totally normal. This was the most common fib retracement in the study of the S&P going back for 20 years. 786, you start to create unbalance. Okay, so if Bitcoin, if the data and stuff comes out, Bitcoin dumps, 618 pops up, comes back down, this could get a lot choppier, a lot more volatility. For the trend to have a higher percentage chance of being up, regardless of what happens, you want to see if that 618 would hold, and that's 27,301. Okay, because then you start looking at potential reversals if you flip the 618 as resistance. So again, totally normal what's happening here. I think a lot of money is on pause, waiting to see what happens with Senior Powell. So we'll find that out, and let's look at our money flow and everything. Money flow, of course, is bearish. Momentum, of course, is flat. But of key note here is you have the squeeze going on. You have very tight volatility compression. Last video I showed you with Bollinger Bands, but I can see it in my squeeze indicator here as well. Very tight compression. You're going to have that pivot. It's going to go up or it's going to go down. I already know. So of course it's going to go up or down. Well, it's not, of course, it could go sideways, but you don't have that type of volatility compression and a major market news driven event happening tomorrow and not get some type of reaction. So, we've lagged on Bitcoin the last couple of pumps in the equities market. So they may want to see if the equities clear some headway for Bitcoin to move. But you got tight compression, and it's going to really depend what happens. So with Powell, looking at gold really quickly. Nothing to write home about here. 3-day chart on gold, guys. You're stuck between 1977 and 1959. So basically, for 6 days here, you're just ping-ponging back and forth between these levels. Remember, I showed you last video, gold moves with the equities typically. If you do get a stronger rally, gold could continue to rally. If the equities start to roll or pump up to a sharp top and dump, you could see the same thing happen here in gold. 3-day chart, you're at the median line on money flow. Looking at this for the bullish case, well, let's say the equities do rally, Brendan. Let's say you have the S&P go up to your target of 46.47 or whatever it was. Let's just call it 46.50. You have the S&P go up. Where could gold go? Well, basically another, $200, which is why I don't, again, this would this would be a very bullish move to go from 1960 to 2171, but that's just a Fibonacci pattern prediction to go up there. Could obviously stop sooner, like 2053, which is where we took our last short at 2055 for that nice retracement on gold. So you always have that double top potential, head and shoulders potential here on gold. So be aware of that. Again, upside, I'm not interested in chasing for a few dollars. You really need to flip your previous sell-off resistance for me to be interested in an upside move in gold, which would be above that 2050 level or 2064 here. You got almost to the wick, okay? And if we look at the same, it's the same with silver. Silver hit the fib we talked about, 25 spot 27, and you can see we retraced, trying to hold the 618 at 24. Upside on silver if they get bullish with the equities. If the equities get bullish with Powell, then you're looking at $26, $27, and of course, 28 would be a nice upside move here from 24 to 28. And again, that would require, I think, a lot of bullish things to go very well, but it is possible. And of course, if this fails, equities start rolling, you've already printed, a triple top-ish head and shoulders type pattern, disjointed head and shoulders, a bearish pattern retracing at a key fib retracement. So something to watch there on silver. Let's check out Tesla. Tesla, we pinged our 1272 at 299, nailed that really well there on the fib. 299 spot 29, 299 spot 65. Have a gap here. Again, if we get bullish, see if Tesla comes up to fill that gap up at 289, 289.52 if you get bullish. And then you want to see how Tesla behaves after that. Let's pull a simple fib retracement here. Let's zoom in. This is a daily time frame. We'll zoom in here and see what kind of levels we're looking at on a fib retracement. If we were to come back up, 786 is going to be key, 289.62. This would give the market permission to go back down if it fills that gap. And of course, if you flip it and flip this up here at 299, you could have more upside, which is possible with a overall bullish market. But watch 289.62, key level there on Tesla. And then if you start falling from where you're at, you want to hold 268, key support that's been tested already, and you're currently above it. Below that, you're at 243, 223. Lots of room to go to the downside. Quick look at the Russell, guys. Russell trading in very clearly defined Fibonacci here. If we look at the Russell, 2.058 at 1992, 1618 at 1955. Cluster of candles here. What will the Russell do? What's the MFI doing? MFI is on an upward tilt here on the daily time frame. Momentum's decent. Let's add the 2618 here. It's going to come in around 2019 or 2030, somewhere in there. See what the upside there? Yeah, 2039. So you have 2039. So again, if you do get more bullish overall market sentiment, watch and see if you challenge 2039 with the Russell. You do have some rotation going into the Russell because everybody's like, oh, you got to buy the mid caps, and it's a greater representation of the economy. But this is an area where you had a lot of problems before that massive sell off. Okay. So watch that 2039. If you do get more bullish, if you start falling 1955, you flip that to the downside, then watch your lower 19s, especially 1903. You want to hold that for support to try to pivot back out. If you lose that, you have more descent to come. I don't think any of these moves are all going to happen in a day, guys, but it sets you up for a couple of days of key levels to look at. Again, JPN, their bank meets Friday. So that's going to be a big event, whether or not they're going to continue to do yield curve control, which means because they've been printing a lot of yen to buy their own bonds. And if they stop doing that because they have inflation rising in Japan, they're at 3.3%, better than most of the rest of the world. But if they stop doing that, you could see the yen rise in strength. So that's going to be an interesting trade to watch too. Well, we'll look over that on Thursday, USD, JPY. But you could also see if their markets would potentially start to have some more issues if their bond yields start rising, which many forecasters believe if they do stop yield control, you will see the world's bond yields also rise. Japan's been providing a lot of liquidity to the equity space. So we'll see what happens with that. But that's going to be key. Your key levels here on the JPN. 32,076, which is your baseline here, 33,633 to the upside. And again, we have to see what happens, and we really won't know. And you can tell in the market here, it's just ranging here. We really won't know until we see what the BOJ does. Look at the DAX really quickly, and then the French 40, and then we're done, guys. Looking at the DAX, remember, this is your all-time high up here. This is what's fascinating to me, and we'll talk about this more on Thursday. Germany's manufacturing numbers just came in at 38. 38. Back down to pandemic lows, but their stock market, this is the disconnect in the marketplace. Their stock market is right near the all-time high. Okay, does that sound familiar, anybody? So Germany is in a recession, acknowledged by the government that it's in a recession, and its stock market is near its all-time high as its manufacturing base. What is Germany known for? Cars, medicines, pharmaceuticals. You have Mercedes, BMW, Volkswagen, Porsche, all those big car companies there. Big, it's the third largest economy in the world. China also doing easing. UK is a disaster. America's not far behind, guys, but this is exactly like our market. And to be fair, this is what a lot of bullish people are calling for. This is Germany's previous all-time high. They're calling for the US markets to make the similar move. I guess you would call them more bullish bears. I don't know. That come up and basically make a massive double top. But unbelievable that you're at near that close to your all-time high and your economy, the underpinnings are crumbling. But this is a mania driven, momentum driven market, and these things can go on. So upside, guys, 16,426 if the DAX breaks out, which it will follow the US equities to a large extent. And then, of course, if it got above that, 16.7. So we'll have to see what happens with that. But downside, 16,000. 15,922. You just start leveling down here if you do start rolling over. 15,820. Okay. So all these levels, and of course, where you tagged here for support at 15,464. And I would obviously look and see what the US is doing before doing anything in the European indices. So look at the French 40. French 40 is behaving very interestingly. We went over these structures last video or the video before as well, but we're starting to come up. We have problems where I told you we'd have problems potentially 74.37 right here on the French 40, fell back down to 73.88. Again, that's the French 40 all-time high. And Louis Vuitton, I think, is a big winner still over there. A lot of luxury, people with a lot of money still spending a lot of money. But, we'll see if this can continue an upwards trend if the US equities do. And I'm really looking at 74.80 here at the 786. That 74.80 range, I would anticipate causing a lot of problems, but you're having a lot of problems at 74.37. So watch your support at 73.88, 73.16, and then 72.59 breaks you out of the channel and potentially returns you back down to these lows around the low 7,000 number. So, guys, I hope you enjoy the rest of your day. Be sure to tune into Thursday's video. I'll recap the whole Powell thing. So, some of you that are busy at work or just don't want to put yourself through that kind of torture, I'll recap it for you. We'll go over the economic state of USA and Europe in particular. And I'll see you guys then. Take care, everybody. I'll answer your comments as always in the comment section.